Hello fellow traders. Today we'll do a deep dive into ETFs. We'll analyze the XLK, XLRE, and XLV covering technology, real estate, and healthcare. We'll review structures, performances, and what makes each sector unique for investors looking for balanced growth, income, and stability. Today we're going to get into ETF deep dives, the XLK, XLRE, and XLV explained by Pajama Trader. Give this a like and subscribe. Let's get into it. ETFs, or exchange-traded funds, are investment vehicles that track specific sectors and provide investors with diversification, liquidity, and transparency. This video focuses on three pillars of the S&P 500, the XLK technology, XLRE real estate, and XLV healthcare. The objective is to explore each sector's performance, growth drivers, and see how these ETFs are used for targeted diversified investing. XLK technology. The XLK tracks leading U.S. technology companies, including software, hardware, IT services, semiconductors. Its top holdings are Apple, Microsoft, Nvidia, and Broadcom. The sector's growth is driven by advancements in AI, cloud computing, digital transformation, and semiconductor innovation. Historically, the XLK has been a top-performing sector over 5 and 10 years, but is also more volatile. Risks include high valuations, regulatory scrutiny, and sensitivity to market cycles. The XLK is a benchmark for U.S. technology company exposure. It's powered innovation by AI and cloud computing and hardware, with giants like Apple and Microsoft at its core. The sector growth is outpaced by the broader market, but is more volatile and sensitive to regulatory and economic changes. XLRE. XLRE provides exposure to U.S. real estate investment trusts, REITs, including commercial, residential, and specialized properties. Its top holdings are American Tower, Prologis, Crown Castle, Equinix. Growth in this sector is fueled by e-commerce, logistics and warehouses, data centers, and demographic shifts. The XLRE offers steady growth in the income via dividends and is more stable than tech, but is sensitive to interest rates. Risks include changes in interest rates, property market cycles, and economic downturns. The XLRE offers targeted exposure to the real estate sector primarily through REITs. It's popular for income via dividends and portfolio diversification, but highly sensitive to interest rates and economic cycles. Growth in logistics and data centers has helped offset the challenges in the office and retail space. XLV, healthcare. XLV tracks U.S. healthcare sectors, including pharma, biotech, medical devices, and healthcare providers. Its top holdings are United Healthcare Group, Johnson & Johnson, and Pfizer and Merck. The sector is driven by an aging population, biotech innovation, and rising healthcare demand. The XLV is known for stability and long-term growth and uses less volatile than technology. Risks include regulatory changes, drug pricing pressures, and political risk. The XLV provides diversified exposure to healthcare, a sector valued for its stability and resilience. While it might not match the explosive growth of tech, it offers steady returns and defensive characteristics, especially during market downturns. Innovation and demographics support long-term demand. Core insights and portfolio applications. So let's talk about these sectors. So today, this is the tech sector. Traded less volume than the day before, and going into tomorrow, it looked to have rejected at 257 and currently testing support at 256. Getting into the XLV, the healthcare sector, seems to be holding support at 136.17 even after the rejection. So if it holds these levels, it could take this level out tomorrow, especially if it has another volume spike like it did today. And looking at the yearly chart, looks like you could almost say this is a cup and handle, but it needs to break through this level right here, which is testing. If it fails, look for it to probably fall back down in this area. The XLK offers high growth and innovation, but higher volatility. The XLV offers defensive, steady returns, and resilient in downturns. The XLRE offers income and diversification, but is interest rate sensitive. A well-constructed portfolio can balance growth, income, and stability by combining all three ETFs. Blending these sectors can help you build a strong portfolio that's robust across market cycles and environments. Closing summary. To summarize, the XLK, XLV, XLRE offer unique benefits: tech for growth, healthcare for stability, and real estate for income. Using sector ETFs can fine-tune your portfolio for 2025 and beyond. Thanks again for watching.